Welcome back, everybody. You're listening to the Northern Miner Podcast, and I am your host, Matthew Keevil. As always, we are brought to you by the Yukon Mining Alliance. Please surf by yukonminingalliance.ca and check out all the exciting exploration and development activity in Canada's Yukon territory. And are you ready to rock? It is almost conference season. It's right around the corner. We got the Cambridge Investment Conference this coming weekend, and we also have Roundup next week. So this is going to be busy. We're going to be firing on all cylinders. You'll find Lesley and myself on the floor at both shows, recording video, audio, and picking up some interviews for some awesome tech stories. So yeah, do come by, say hello, stop by our booth. We will definitely be around, and we always like to say hello to everybody. And while we're on the vein of conferences, I will be participating in a panel, the Yukon Lunch Panel on January 23rd at the Cambridge show. It is a ticketed event. We have some great panelists lined up for you. And please do think about, at least stopping by and saying hello, but also picking up tickets. The panel will include Byron King from the Daily Reckoning and Gwen Preston from the Resource Maven. So it'll be a great chat. We'll be tackling everything from macro down to some of the more specific Yukon-related concepts, new government and things like that. So yeah, do think about stopping by. It'll be a great chat. And as for the show this week, it's going to be great. As always, I always say that. But I feel like we do have great shows. So Lesley will be dropping by. We have an awesome Geology Corner this week. It is investment related. So if you're out there looking at mining stocks thinking, maybe this is looking like we might be emerging from a down market, what should I look for in stocks? Lesley's going to stop by and come at that question from a geologist's point of view. So we will be chatting a bit on what she looks at when she's writing up stories, looking at companies, interviewing VPXs, interviewing executives, what she looks at in technical reports. So Lesley's going to swing by and wade in with her experience on working in the industry and also covering it from the newspaper point of view. So that's going to be a great Geology Corner. We'll run that in a little bit. But before we dig into that, there are some important macroeconomic and socio-political issues that definitely deserve a mention. It should be noted that bullion prices have risen every day in 2017 except for one. Scotiabank cites this as evidence that investors are pricing in a quote-unquote rocky year ahead. Meanwhile, the United Kingdom is preparing to sever ties with Europe. Prime Minister Theresa May is setting up for a major speech on Tuesday in which she will lay out a plan for Brexit. This will likely involve the UK pulling out of the European Union's single market for goods and services and seeking a completely new trade relationship. Furthermore, Donald J. Trump continues to send shockwaves through the global economy. Recent comments by Trump insinuated that the US dollar was too high and sent the currency reeling. The context of the comments was in reference to China, and Trump said, quote, "Our companies can't compete with them now because our currency is too strong, and it is killing us." So that would explain why our gold prices have risen today and for the bulk of 2017. As we were recording today, gold was trading at $1,218.40 per ounce. Silver was trading at $17.18 per ounce. Copper was down to $2.62 per pound, while West Texas Intermediate oil was up to $53.26 per barrel. And as mentioned previously, we have a lot of gold reporting going on in terms of quarterlies and producers. Scotiabank was nice enough to send us over gold price share per performance in terms of from September 30th, and that was the last time gold was above $1,300. The gold price close at Q3 16 was $1,316 per ounce and is now down about 8%. So what Scotiabank sent over was a price performance US dollar adjusted chart from September 30th through to the present. So what we're dealing with here is just a list of the top performing and bottom performing gold equities since Q4 2016. And so I'll just rattle off maybe the top 5 to maybe 6 or 7 of the top performing and bottom performing stocks over the last quarter, starting with IM Gold at number 1, which is up 12% since September 30th to $4.52 per share. Number 2 is Golden Star Resources, which is up 8% to 90 cents per share. B2 Gold comes in third, up 7% to $2.82 per share. Fourth is Oceana Gold, which is up 5% to $3.15 per share. Well, we're getting into silver a little bit here, but Hecla is up 5% to $5.97 per share. The bottom 5 performing stocks include Primero, which is down 52% quarter on quarter to 80 cents per share. Detour Gold is down 38% to $13.51 per share. Tahoe Resources is down 30% to $9 per share. Goldfields is down 29% to $3.44 per share. And Alistair Gold is down 26% to $1.85 per share. Interesting stuff. Some of the major Canadian miners we'll look at. Goldcorp is down since the fourth quarter 11% to $14.66 per share. That's about... it ranks 27th on our chart. One of the other ones we wanted to look at was Barrick, which is down 3% to $17.23 per share. And also, just a quick look at some of our major streamers. Franco-Nevada is down 8% to $64.23 per share. Sandstorm Gold is down 10% to $4.53 per share. Meanwhile, Silver Wheaton is down 24% to $20.64 per share. So it'll be very interesting to see as we move forward here, if we can sustain a gold price between $1,250 and $1,300, how these equities respond. And while we're on the news of gold majors, there are a pair of releases from last week that definitely deserve mention. Both involve Goldcorp and both involve asset sales. On January 12th, Goldcorp announced the sale of its Los Filos mine in Mexico to Leagold Mining Corporation, symbol TSXV-LMC-H. This deal included consideration of roughly $438 million, which consists of $279 million in cash and $71 million in Leagold common shares. As we know, we've heard numerous times, David Garofalo, the new president and CEO of Goldcorp, has sort of earmarked Los Filos as a non-core asset that was available. The interesting sort of angle on this deal is that Leagold is essentially a startup or shell controlled by Frank Giustra and Neil Woodyear's group. So they are two people who can definitely raise that sort of capital to acquire the asset, which is somewhat rare for, I shouldn't call them juniors, but startups in this business currently. So that should be one to watch, Leagold, to see what they do with that and what else they might have in their back pocket in terms of acquisitions. Also, the smaller of the two deals was announced on January 11th, wherein Goldcorp sold its Cerro Blanco project to Bluestone Resources for around $18 million in cash. Now, once again, this is a little bit of an interesting due to the corporate vehicle on the buy side. Bluestone Resources is a shell controlled by John Robbins and the group formerly many of Kaminak Gold, which was previously acquired by Goldcorp. So this is sort of, obviously, relationships are important, and they've picked up this asset in Guatemala. Once again, we knew that Goldcorp was rather keen to get out of country. They are in the process of sort of shutting down their Marlin mine. Reclamation and revegetation activities will be ongoing, I should say, over the next 3 years. So that's just a couple of interesting little side notes in terms of the gold majors. One of the other things that we picked up from the Investors Day, David Garofalo mentioned he's interested in picking up partners to develop large-scale projects due to decreasing risk, which is a fairly obvious statement. He also said they're looking at M&A to find more large resources that are undeveloped right now because the gold mining industry, quote-unquote, risks irrelevance. So that's just a few side notes from the gold reporting. We'll touch base on some base metals and things like that in future episodes, as well as any gold earnings that come out subsequently. But let's get on to it. We've got Lesley's Geology Corner, and there's some really exciting stuff in here. This week, we'll be touching on sort of, as I mentioned, an investment angle, wherein Lesley will draw upon her experience both as a geologist and a reporter in the industry to sort of outline what she looks at when she is vetting companies, going through news releases and reading 43101 technical reports. So she'll dig into a little bit of things on drill hole reporting, mapping, how best practices in terms of exploration and things like that. So it's really cool and really valuable if you're looking at this market and thinking, well, hey, commodities are up quite a bit. People have made a lot of money over the last 12 months, but where do I start? Well, here's a good place to start. So let's crack right into it and let Lesley talk to us a little bit about a geologist's point of view on mining investing. And it's a really interesting segment. So I'll run it now, and I'll see you guys on the flip side.
Yes, happy 2017, Matthew, and everybody listening. So I thought that I'd kick off the new year with maybe top 6 ways to tell if a company has a good handle on their project's geology. Things that investors commonly overlook.
Mm-hmm. Yeah, okay, that sounds great.
Cool. Well, maybe I'll just kick it off. Number 6, these companies, they report cut versus uncut gold assays. Now, while there's no global standard on how to calculate intercepts, it's usually specific to the project or the company. But since we've seen a rally in gold prices last year, I also saw a rally in uncut assay reports, okay? So I kind of equate it to like a Russian doll. You have a doll within a doll within a doll, but this one, it's like you have an intercept with an including and an including and an including and including.
Yeah, there's like 80 of them.
Yeah, and then suddenly you get to the point where your 10-meter wide intercept was actually a 30-centimeter interval of 1,600 grams gold with a really broad halo of low-grade gold around it.
Yeah.
So it happens. So I feel like a company that is really confident in their project will not only be clear with their intercept if it's uncut, but they'll also kindly save you the trouble of having to figure it all out on your own by presenting cut assay results. So chopping it off, letting it go. Number 5, they don't take claim of historical results. So although recycling is super good for the planet, recycled historical drill results isn't. And I've seen some companies report drill holes from within meters of historical drilling. This totally normal, by the way. They do it to kind of like, make sure that the previous drilling was accurate, and so they can use the data with confidence. But sometimes, I come across a number of repetitive press releases from a company with bold statements saying, our company hit, 65 grams of gold over 3 meters. But I'm sitting there and I'm all like, well, you kind of did, but you didn't. And so I'm sitting there, I'm just like, you never hit that. The other company did, but they can't really hear me because I'm just talking to a computer screen. But anyway, so that's... So I feel like a company that's really focused on the future, they're not going to spend a lot of time in the past. And number 4, this one especially, they're guided by their inner structural geologist. That structural geology is the most underappreciated aspect of a geologist's job, yet it's the most critical. At least I think so, and a lot of my friends think so too. So this is made glaringly obvious with, of course, Rubicon's demise. With the Phoenix project, where their tabular-shaped ore bodies suddenly became an echelon vein system. Surprise! So, in fact, the majority of projects I visited or I've looked at, very rarely do they have oriented drill core. And I'm talking about greenfields projects, where they're not collecting any measurements, structural measurements of the drill core downhole, because they're not doing this specific tool that you do during the drilling process. And so when I ask them, why is this not part of the program, they'll say, either it's too expensive. Yeah. Well, it is, but it's for the value what you get is enormous. But I know what you mean. Mm-hmm. So, or they also say, it won't work here, which I get. I totally get that, because sometimes you can't do downhole structural orientation because the rocks are really broken up. Or maybe you actually have tons of structural measurements because there's a lot of outcrop on the surface, right? So that makes total sense. But in all other scenarios, just popping in a few drill holes with oriented drill core can really give an explorer a huge bearing on their target. Yeah, so you basically, you drill, as you're drilling at the end of every single run, however meters, the driller will kind of orient the core so that it's facing a certain earth orientation, and they mark a little mark on the drill core, and then you can draw a line down that I'm explaining this terribly, but you draw a line down the core, and then that gives the geologist how that core is sitting in space. So it's the bottom. It's that line is the bottom of the hole. Okay. So the perfect bottom. Yeah. Relative to its angle, and then you can take measurements of different angles in that core, and then you just pop that into your computer program, and then that tells you, wait, this vein is actually dipping vertical or this direction rather than this other direction that we thought it was going. It's a simple tool that you rent from the drill company, and then it takes maybe another, I don't know, it depends on how deep your hole is, but it's not really expensive. It's actually not that much, considering that you're doing diamond drill core in the first place. A company for me that will be the most successful at exploring greenfield targets will have a strong structural understanding of their deposit or the project and the region they're working in. And you'll see that on their company website, in their presentation. They'll have a good firm handle on it, which is kind of hilarious because that's number 3. Context. Their press releases, your company that you hold dear to your heart, their press releases, company presentations, and website provides beautiful, glorious context to the project and to the drill results specifically. So there's nothing worse. I don't know if you're like this too, but when you're reporting on a company and you have to dig through their company website to find where their drill results came from.
Yeah.
Right?
Yeah, there's no collar map.
There's nothing. Yeah. And I'm just like, I like knowing how much of a step out the holes were from previous drilling, right? Yeah. We have to report on it. In the case of gold, if the intercept is made really far away, it could be a completely different mineralizing system, right? Yeah. If it's too close from the previous intercepts, it hasn't added any value to the project. And there's so much more to a drill hole than just an assay number. So a company that is well organized and super knowledgeable, they're going to be transparent with their data. So they know that for an investor to do their due diligence accurately, the more context, the better. Number 2 is they'll all have really sexy geology maps. I'm talking about, your favorite company, the company that you want to invest in. They'll all have really sexy geology maps. Kind of going back to the previous one, sometimes I really struggle to find even a geology map on a company's website. And worse still, when I can't find it in their technical report, like a PEA. Like it's just a really poor quality one and stuff. Yeah. And so it lacks a lot of super important data, and all that I think is really critical, again, for an investor to do their own due diligence. So for me, like whatever geology map is placed in a company's PEA or feasibility study or on their website for the whole world to see is the map their geologists have to work with when they're planning drilling. So if the quality of that map is really poor or outdated, then the drill holes that these geologists are planning may not be accurately positioned, if that's the map that they're working with. And combine that with no downhole structural data, can you imagine? It would just be like, seriously, making assumptions and shooting blind. So a company that has a really strong foundation for drill planning that will, have the best success with their programs will have a suite of maps available. The final one, number 1.
I'm pretty sure I can guess what it is, but...
Well, actually, like the geology map one originally was number 1. Yeah. But I kind of realized, wait a second, when I was doing all this, I thought, no, there's something else here that I'm missing. There's something more important than all of this. Yeah. And I realized is that the company that you want to invest in, their technical data won't be overkill. So while it's great that a company has like heaps of maps and they have like great presentations and good structural geology, it's like anything in life, anything else in life, a balance is totally necessary. So you can't be too cute, as Eric Sprott would say. Yeah. Right? Trying to figure out where your next big strike will lie. Because there is such thing, there's a saying in geology amongst geologists, you're either a splitter or you're a clumper. And so splitters, of course, are people who just like look too closely at all the details. So these are the geologists that are always trying to outwit the ore body. But you can't outwit the ore body. It's impossible. The ore body has control always. Yeah. Geologist rarely does. And so a company that's really well balanced will also allow room for some dumb luck, creativity, and be adventurous enough to like go against the status quo, right? They're confident, yet they're humble. And the best way that they get a feel, and the best way to get a feel for this aspect, right, is to go to the trade shows and talk to them. Because you can really get a feel for like where they stand in that splitter clumper sort of mode. And you can see it on their website too if you get super overwhelmed by so much information. There's an art to this industry, or you don't want to give too little, you don't want to be overlooking things at the drill rig, which leads to disastrous results. Yeah, exactly. Right? You don't want to be drilling blind. So there is a good balance there. And I feel like just as a geologist now, I've been reporting for the past 2 years. When I report news as I see it. But there's always this geologist sitting in the back of my mind being like, where is that geology map? I
need to look at this more.
Why? Why isn't there a geology map? So I
Who
thought...
has it? Where is it?
And I'm like fumbling on my desk, I'm trying to draw one of like, putting in the coordinates and just drawing and how much of a step out a drill hole is. Well, it's a side note too. Ivanhoe. I used to work for Ivanhoe for a really short period of time. I hurt my back and I came back home. And I got to give them a shout out because if there's one company that I worked for, they were all great. But if there's one company that I really got to say stood out in all corners of being able to do your technical side and being super well organized and having that balance, it was Ivanhoe. As a geologist working on their projects, I was like so blown away by just the ability I had to be able to move to do my technical work, but at the same time do my deliverables and keep my eye on the ball at all times, but still have that creativity to play with. And it was like if I ever met Rob Friedland, I'd tell him that. I'd be like, man, that was good.
And welcome back to studio. Those are features we're going to be looking at providing moving into the new year, wherein the Northern Miner staff offers some of their expertise to help out neophyte and experienced investors looking at the mining industry. So we'll get Lesley to chip in with some geology in terms of what we sort of look at as a team in terms of 43101 reports and news releases. And we'll also reach into our bag of tricks, and perhaps I'll chime in on some of the financial side, including things like private placements and capital raises. But that sort of brings us towards the end of the show this week. Just a few updates on what may be coming down the pike, or I should say what is coming down the pike. We have a uranium special upcoming, and our editor-in-chief, John Cumming, will be looking at uranium prices in his editorial. One note that we sort of earmarked on January 11th, Scotiabank noticed that a very positive event for uranium was the announcement that the Kazakhstan uranium industry will be cutting production by 5 million pounds, or roughly 10%. This came on the heels of a national atomic company, Kazatomprom, announcement that it planned to reduce 27 uranium output by that 10% number. They cited slow uranium recovery prices as the reason behind the decision. So that's sort of alongside the fact that Donald Trump has mentioned nuclear power as a potential strategic form of energy generation for the U.S., has seen a bounce back in uranium prices. On the personal side, if you want my opinion, there's also the concept that uranium stocks were more than likely oversold. So when you saw Cameco at sub $10, you could sort of see maybe that there was room for an upside correction. We've also seen companies on the exploration side gain ground in that regard. NextGen Energy being first and foremost, with a large rise over the last 2 months to break the $3 ceiling, trading over $3 at the time of recording. We've also seen Fission Uranium have a bounce back. It should be noted both companies have either equity or debt relationships with either Hong Kong or mainland Chinese interests. So it should be interesting moving forward, and please do tune in for John's editorial on uranium pricing and what might lie ahead for the industry. But yes, once again, this has been the Northern Miner Podcast. We do appreciate your listenership and everyone tuning in. Please do like us on Twitter, follow us on Twitter, I should say, like us on Facebook, check out our SoundCloud account, and also please do rate us on iTunes, because that helps us out a ton. And this has been Matthew Keevil reporting for the Northern Miner. We'll talk to you next week.